Hey, it's Carol and Tim.
And we have something new and exciting for you.
Everything you love about Bloomberg Radio is now in your car.
The new Bloomberg Business app, now featuring Apple CarPlay and Android Auto.
Listen to your favorite Bloomberg radio stations anytime.
Plus, every Bloomberg podcast, the latest news and more, all at the click of a button.
It's free and simple to use. Just download the Bloomberg Business app on your smartphone and connect your phone to your car.
The Bloomberg Business app, now with Apple CarPlay and Android Auto features. Download it free in the Apple App Store or on Google Play.
Presented by our sponsor, Interactive Brokers.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenevec from Bloomberg Radio.
All right, so we promised you a lot of the most read stories on the Bloomberg, and it does feel like the bond market, man, the gains that we are seeing, the biggest boom that we've seen in decades. This month has been very different for the U.S. Treasury trade, but it's also mean like everybody's kind of all in on everything. So let's get to it. Back with us, the killer duo that wrote this story, Bloomberg News rates reporter Michael MacKenzie. He is joining us, as well as Liz McCormick, Bloomberg News chief correspondent for global macro markets. Liz is on Zoom in New Jersey.
Dynamic duo.
They are the dynamic duo. Michael, I want to start with you. You two are really the bells of the bond ball right now, because I feel like it is like your world in a big way as we watch the very different trade that we've seen in November. This has not been, though, an easy year, Michael, for the U.S. bond market, and yet here we are in November. How remarkable has this trade really been?
It's certainly been remarkable, and it's really something that a lot of the active bond managers have been hoping for. They've been trying to position for it pretty much since you can go back to last July of last year when they had the first kind of Fed pivot. They thought inflation was transitory, and therefore they started putting bets on that the Fed would stop in the middle of 2022, except the Fed didn't stop. Inflation wasn't transitory. And I mean, I was talking to one of the investors who over at Western Asset who's had a terrible time, but for November, their fund has jumped 6.5%. So he was saying, you know, you got the call wrong, but things are looking better now. And there's a lot of relief from those guys.
Liz, I want to bring you into this conversation. Let's broaden this out. So not just U.S. Treasuries, but other parts of fixed income also this month having pretty strong month here. Talk to us more about that.
Yeah, so the index in the story that Mike, who I feel like is my fourth brother, I have three. And
Is he on speed dial? All that good stuff?
Exactly. But is the U.S. Ag, which is treasuries, corporates, and all that other good stuff, a bunch of bond types in there. And that, like we show in the story, you know, was having the best month since the 80s. And it's just amazing. I was saying earlier to someone that, like, look at that IN page on Bloomberg, which Mike and I used to always look at it. It was like red everywhere. That's all the bond indices. Now it's all green. I can't believe it. You know, I mean, like from month to date, year to date, you know, and like Mike said, some of these investors, which I guess you got to give them credit, they stay the course, they take the pain, for a while been saying, oh, it's a good time for bonds. And they haven't, you know, got any, let's say, success on that. And now they have. I mean, this month is just, I mean, and Mike and I keep saying it's not going to be a straight line like this. It's not going to be 60 basis points a month, but it's definitely kind of lifted all boats, as you said.
I'm pulling up the page. Canadian aggregate, China aggregate, credit, corporate, global inflation link, global high yield, pan-European high yield, treasuries.
One after another.
It is all green, all green. But, you know, Michael, Liz gets to a good point. Is this it? You know, it's been a very volatile market, to say the least. So, and I do wonder, does this trend continue, and what's necessary for it to continue, and does it necessarily translate into other parts of the fixed income world?
That's really a great question. It's really what's got everyone thinking in the fixed income market, because clearly you've got treasuries, which is the sort of your classic defensive haven, rallying strongly, but junk bonds had a great month of November too. So there's a disconnect. I think at the moment the market's looking at soft landing, because we're nowhere near the lows in treasury yield that we saw back in March when regional banks failed and the bond market was definitely thinking recession's coming. So now the debate, it has shifted from the Fed higher for longer and maybe having to raise rates again we now have kind of a new dynamic where where the market now thinks the Fed is going to cut next year. The question is, are they going to cut by just the 50 basis points or half a percentage point that they indicated in their dot plot earlier this year, or do they do more? And it really comes down to the sort of type of slowdown that we're going to get. And I think in that environment, any kind of turmoil that starts to seep into equities and the riskier parts of the credit market, any sort of shocks we get from commercial real estate over the next couple of quarters is going to really make owning yields above 4%, particularly in the sort of 5-year part of the Treasury market, a very good trade.
Well, and then Liz, what I keep thinking about, and we talk about this in the newsroom a lot, it's like, okay, it does feel like things are settling down. We keep getting these inflation reports, like everything, the softness. And yet, I think about next Friday's jobs report. Does it just take one report to remind us that, wait a minute, guys, it's not a straight line, and that is something that the Fed takes note of?
Yeah, I think it's going to be hard for that jobs report to kind of change the whole zeitgeist. However, I think, to your point, Carol, we're going to have a lot of volatility because the Fed, even the folks that like Waller, who sounded quite dovish, the usual hawk this week that's kind of lit the kindling going this week, but that they're still saying we're watching the data. I mean, of course, if things change and they kind of somehow out of nowhere get a string of the labor market not easing, inflation bubbling back up. I'm not predicting this, but they will have to kind of at least lean in and sound hawkish. So, yeah, I think that's why the bond
Waller
market,
today. Oh, no, I'm not Waller. Like John Williams today, right? Saying it's quite restrictive, but it's going to stay restrictive for some time. So they're going to kind of keep reminding us of that.
Exactly. And we have Powell tomorrow. He might do the same kind of. I don't think they want the market to get so ahead of them. I mean, the market is ahead, but there's probably a limit to how much they'll, accept that.
And Mike, I wanted you to jump back in because, as Liz mentioned, Powell does speak on the calendar twice tomorrow. This comes ahead of the blackout period next week. What do you think investors want to hear from Powell versus what we would most likely actually hear from him?
Well, I don't think they want to hear him being hawkish. I think they want to hear him sort of being at least sort of mimicking what John Williams said. And I expect they will hear that. I think Powell will play it pretty close to his chest. He'll essentially say, look, they're in a good spot. They just have to sit back and watch the data, which is what all the bonded market has to do as well. And ultimately, it's kind of now out of the Fed's hands. The data is going to determine just whether or not the bond market's, thinking of rate cuts coming potentially as early as next March do come to fruition. If inflation continues to fall and if we start to see the employment market weaken, probably not next week, but probably more in the early next year, then you're going to see the bond market will start to run ahead of the Fed. Talking to investors this week, it's notable how some of them have been, as one said to me, I've been through 5 easing cycles. We know what happens here. Once it gets going and the market wants to jump ahead of this. And so I think that's really the key point to remember.
Well, and that's what I was thinking about, Liz. Like, I'm looking at the story that you guys put out. I'm curious what, PIMCO's doing, Double Line's doing. What are the positions? And you guys, say how that they've been kind of loading up on longer dated debt, and that just keeps on rising.
Yeah, and Mike was out there, not this week, but last, kind of visiting all of them, right in their shops and, kind of up front and center. And they were saying, and it's, that didn't work out the next day or so, but they're long-term investors saying, hey, we all love cash. Everyone's saying cash at about 5%, but they were telling Mike, there's going to be a point where you're missing out. Like, it's kind of time to get into further out the curve. And boy, they nailed that call with what happened this week. But that there's a point where, because I always say you can't react fast enough. That's why, all the textbooks say long-term investment, don't jump around, because by time, us average folks say, oh, wow, the cash rate went down so much, you've missed a lot of opportunity in the stock market and the bond market. So that's why they were saying, hey, you've got to get ahead of this and kind of go out the curve.
One last thought, guys. This is not just a U.S. thing, obviously. It's a global thing, right? And you have global central bankers at work and everybody dealing maybe with different economic or inflationary pictures. So, Mike, how does that complicate maybe to what comes next or make it even more interesting?
Well, I think globally the economy is slowing. We haven't really seen the revival of Chinese growth, which everyone expected earlier this year. It's been another one of these missed sort of trades. You've got the oil price not really getting much love here, even though OPEC's just announced it intends to cut supply. So that's kind of telling you the economy is globally, it is slowing. And it's quite clear when you look at the inflation data across regions, it is slowing in unison. So that tends to suggest that we are going to go through a period of softer growth, inflation easing back, and it is going to give central banks a lot more room to maneuver, although I'm not sure the Bank of England has that luxury, unfortunately for them.
Exactly. Just 25 seconds left, Liz. Part of me is like, I'm so suspect because I feel like I have been fooled so many times over the last couple of years. Is that a fair way to feel, or do you feel like something's different now?
Yeah, Carol, I think I've been you and my team. I'm always like, the curmudgeon, come on, And but I think this time it feels a little bit different, that it's pretty broad-based. And like Mike said, and I think before we went on, I believe I saw Goldman Sachs, European economists, pull forward when they say the ECB starts cutting next year, because they had a soft inflation data out overnight. And so I think we are seeing the disinflation, so we're okay. Maybe we can trust.
All right. So appreciate it, guys. Bloomberg News rates reporter Michael MacKenzie, also the fourth brother of Liz McCormick. No, just kidding. And of course, Liz McCormick, Bloomberg News chief correspondent for global macro markets. It's among the most read. It's really what this month has been so much about, and it really is about today's narrative. Thanks, guys. This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
Let's get back to something that certainly impacts a lot of Americans. Bloomberg editorial board writing about this in September. The U.S. prescription drug market, very different. Patients and providers don't make decisions about whether a treatment offers good value. Middlemen do. These intermediaries, which design prescription drug coverage and negotiate discounts for health plans, get bigger fees for more expensive medications. And as a result, you've got payers such as Medicare that can't be sure that they're getting a good deal. And other countries do it very differently. So let's get to it. Some thoughts on how it all works in the U.S. With us is Ji Bai, professor of health policy and management at Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, of course, founder of Bloomberg LP and Bloomberg Philanthropies. Ji is on Zoom in Washington, D.C. Ji, nice to have you here with Jess and myself. Talk to us about this, these intermediaries, pharmacy benefit managers. You know, I think we all thought that they were going to make it all more efficient, and I guess we thought it would be better for consumers. Why is it not working out as we all thought?
It's actually not working for cheap generic drugs. So we found, $100 paid by Medicare, actually $41 will go to PBM just as a spread, as profit. And then manufacturers only got $30. So in other words, PBM's profit, the spread is already 30% more than what the manufacturers get in their revenue. And then pharmacy got $17, and then wholesale got $12. So you can see this whole supply chain is very inefficient for the generic drugs.
So how did that happen? I mean, how is it that and we've done some stories, certainly Bloomberg Businessweek has done some stories. Increasingly, we're looking at what's going on. How can it be better? You guys did a study. What did you look at specifically? What did you find?
Mm-hmm. So, why this happened, everybody want to get a big cut, a high spread if it's possible. But in most markets, you can't because of competition, right? If you're too greedy, you have a high cut, guess what? You'll be driven out of the market. But the PBM market is very different. It's not very competitive. So this lack of competition allows the PBMs, like we have only 3 large PBMs, to generate such a high, large spread. So in other words, if you're powerful, you can charge high from insurers, and then you can pay low to pharmacies. That's what we found in our study.
What's shocking, Money would say, is if the government was involved, do you think that they would be saying, hey, guys, this isn't okay. This isn't right. And I do feel like there's, slowly some momentum to do that. What are you anticipating potentially on the regulatory front?
Right now on the Hill, there's some proposals to ban the spread pricing. But guess what? If we do not change the market dynamics, we cut the spread pricing and then other things will pop up, right? It's like a waterbed effect. So I think fundamentally we need to address the market inefficiencies. Insurance actually works very well for high cost, expensive, low frequency things. That's why our car insurance does not cover oil change, right? Our home insurance does not cover gutter cleaning. But for generic drugs, they're relatively cheap. So using very complex insurance to cover it actually is not efficient. Studies found for many patients, the out-of-pocket cost is already higher than the cash pay. Let's say if they go to GoodRx, Mark Cuban Cost Plus company, or Amazon Pharmacy without using their insurance, they pay a lower price than if they use their insurance for the out-of-pocket. So that tells us insurance actually is not efficient. Let's get it. Let's say push.
Yeah, no, it's fascinating. And I was thinking about and kind of prepping for this story, other countries, whether it's Australia, the UK, they don't have this middleman because they've got a single negotiator, the government, their governments that can press essentially the drug manufacturers, right, for discounts. And they regularly are doing oversight, doing cost effectiveness assessments. And so their prescription drug spending is a fraction of the United States. So anytime you throw in a middleman, there's going to be increased cost. But it does sound like it's getting out of control. You say, though, in particular, that there should be an end to insurance coverage of low-cost generic drugs. You're saying we don't need it, right? Because they're so inexpensive.
Right. And actually, that will save everybody money. Right, we get higher take-home pay, we get lower premium, or they can put government or sponsors can put more money in our health savings account. Then we can use it for buying the generic drugs. Right now, it's $5 per month from Amazon Pharmacy, and then we can use that for all sorts of social determinants of health. Right, and then that can actually improve our health.
Yeah, it's interesting. It's certainly, you wonder if it'll come up in the upcoming politicians when they are out on the campaign trail for the November elections, because it certainly impacts a lot of Americans. Ji, thank you so much. Ji Bai, she's professor of health policy and management at Johns Hopkins Bloomberg School of Public Health, joining us on Zoom from Washington, D.C.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, he's back, Sam Altman, back at OpenAI, the ousted leader of ChatGPT maker OpenAI, but he's back at the company, returning there to the company that fired him earlier this month. It was quite a power struggle that shocked the tech industry, gave us all whiplash, brought attention to the conflicts around how to safely build artificial intelligence. And this story, written by Shireen Ghaffari, it is in the new issue of Bloomberg Businessweek, which is out on newsstands as we speak, on the Bloomberg terminal and also at bloomberg.com/Businessweek. But it's interesting. He may be back, but there's a lot more that he's got to deal with, including governance issues. So let's get to it. With us is Rachel Metz, AI reporter at Bloomberg News. She is out there on Zoom in San Francisco, right here in our Bloomberg Interactive Broker studio. Bloomberg Businessweek technology editor Joshua Brustein, along with the editor of Bloomberg Businessweek, Joel Weber, as we said, here in studio. So Joel, Sam Altman winning the AI
stuff
award.
Happened. Yeah, I was like on vacation.
It ain't over.
I was like on vacation and I left and he was in charge of OpenAI.
How
and then
hard
a bunch
was it
of
to
stuff
keep
happened,
track of
and I
everything?
came back and he was still in charge. So like
nothing
changed.
happened.
Yeah. That's not true at all. Of course, a lot of stuff changed along the way, and I couldn't stop reading about it because it was just
I know.
One of the most incredible stories of the year, and I think we're all still waiting to figure out what it all means. And
I keep
what's
saying
next
TBD
for Sam and OpenAI and all of that. But to break it all down, Josh, like what were the stories that we wanted to have in this week's issue, and what do we know, and what do we not yet know?
Well, I think there are two big things that we covered in the issue. The first thing is just what's going on with Sam Altman. Obviously, he was very surprisingly fired and then very quickly brought back as CEO of this company, which is right in the middle of all the discussion around tech and AI over the course of the year. And in some ways, he's brought back, and his reputation has been really bolstered. I mean, anytime that you are the boss of a company and 95% of the employees say they will quit if you are not brought back as boss, that's unusual. I mean, I've had jobs before. I feel like that's not always how people feel about the boss. But there's still
how much was about the value of the company?
Oh, yeah, for sure. There were some financial reasons that these employees wanted Sam back. There's a large tender offer in which they would be given a chance to cash out shares, and the investors who were part of this deal were getting a little bit queasy about going through with it if Sam Altman was not back. So that's obviously part of it. I don't think that's all of it. I think Rachel probably knows this better than anyone, but I think Sam Altman has really built up a reputation among the people at the company as someone who takes the really big issues that they are looking at seriously.
Rachel, come on in on this because you've been following this closely. I mean, you finally, hopefully, got some sleep because I know none of you guys were. It was around the clock. It was kind of one of those things you walked away for 20 minutes or didn't read your phone and you're like, wait, something new changed.
What is sleep?
What is sleep?
Yeah, what is it? No, I didn't walk away. That was the problem. My family was like, if this keeps going, we're going to murder you.
All right. So now that you've got some REM sleep, how are you looking at it and what's still kind of at issue?
Oh gosh, so there was a lot of rubber stamping that happened just yesterday in terms of saying, okay, the company saying, okay, Sam is officially back. We're still figuring out a few things. We have the new board members that we said were coming in. So initially there was an agreement for him to come back, but it was an agreement in principle. Now they've worked some of those things out. There's going to be some additional board members. Right now there's 3 board members. They're all men. So they're going to be looking to enlarge the board, also make it more diverse. We're going to be keeping an eye out to see, like, if there are governance changes, how will the board interact with Sam in the future? Like, clearly there were some issues at play that got the initial board to oust him in the first place, right? Otherwise, none of this would have happened. So it'll be interesting to see if anything is changed, either specifically in terms of like rules that they have for how they're communicating or interacting, or simply if he is doing a better effort to work with this board in a different way. I think that some of it remains to be seen, but it's clear that we are going to see some changes.
Okay, so what about Microsoft in all of this, Josh?
Well, Microsoft, the biggest investor in OpenAI, and unusually really had no formal control over the company. I mean, this is what the board, why the board was able to go ahead with this. OpenAI is an unusual entity in that a nonprofit entity controls the for-profit startup, and the board of that nonprofit can make the decisions. Now, I think what Microsoft showed is that when you've invested, I think, $13 billion into a company, you get to flex some power even if you don't have a board seat. Mm-hmm. And the company was really played a key role in bringing Sam Altman back. It's been announced that Microsoft will hold a board seat as a non-voting observer going forward. So they're being brought in a little bit more, but obviously they have a big stake in OpenAI developing and continuing to thrive, and also developing along the ways that will be commercially useful for Microsoft itself.
Hey, Rachel, I wanted to ask you about the personalities on the board, because there was a surprise pick when it comes to Larry Summers. Talk to us about who is the makeup of this new board.
Is he the adult, like in the room? Is that what this is?
I don't know.
What is this?
Adult. I don't know. I talked to him yesterday, actually. I got a chance to do a quick interview with him. And yeah, it was interesting to talk to him. This was like very late yesterday, after the announcements came out saying, like, yes, Sam is officially back. These are, as we said before, these are board members. Larry's interesting, as many people know. He's got experience in government. He also is a Bloomberg TV contributor, I believe, and has expressed a lot of views about AI, has thought a lot about AI. My impression from things that he said, both to me yesterday and in the past, in general, publicly, is that he kind of feels both ways on AI, that it could be, that it is growing fast, it is extremely interesting, and it could be extremely useful and powerful, and it's a huge shift in how technology is working, but also that there are concerns there about how it could be used. So it'll be interesting to see how he's interacting with the other board members, which include Brett. Someone help me here. I'm blanking on Brett's last name. It's
Brett Taylor. Brett Taylor.
Brett Taylor. Thank you. Sorry, It's been a long. It's okay. 5 hours. That was actually.
You need more sleep this weekend, kiddo. Still.
Thank you.
You're welcome.
So Brett should be an interesting addition as well. And it is, I think it's interesting to note that Adam D'Angelo is the one remaining board member.
What happened? What's up with that? Why is he the one?
He's sticking around. I mean, I think it was pretty important to the outgoing board members. That would be Tasha McCauley and Helen Toner to, as part of this deal, to bring Sam back, to have one person remaining.
This is the dude who led his ouster, right? History. Isn't this the guy?
Yeah,
there's never been a board story as interesting as this one.
Like, right?
They're usually so quiet and peaceful and mysterious, and then it all breaks open over generative AI.
Yeah, no, there's going to be some really good books, maybe a movie. Let's wait a couple of years. There's going to be some good stuff.
Well, you can pitch us.
I'm going to talk to the therapists who've been helping out this board, perhaps, with this company.
Oh my God! Yes,
okay, so
right?
yeah, totally.
Or just the Thanksgiving conversations
that
we're having. Yeah. Rachel, what don't we know still?
What don't we know still? So we're still looking at what exactly happened here. There are reasons for doing something as drastic as getting rid of the CEO of a company, and then also doing something almost equally as drastic as bringing them back, right? So there's still, I think, a bit of mystery surrounding all of that. Hopefully that'll be figured out very soon, TBD. And I think it's also a bit of a mystery, who's going to be joining the board going forward and what's going to happen with them. Who are they going to be? What are their aims going to be? And then the other thing that's still a little hanging out there is Ilya Sutskever, who was also a person at OpenAI, who was also a board member who was involved in the ousting of Sam Altman. It sounds like they're trying to get him to come back in some fashion. But it's not clear yet what that's going to look like, if he will in fact be part of the company.
That's the key player actually that I was thinking about. It's just it's just unbelievable, frenemies or whatever. But they also, Joshua, right, are doing an investigation still, or some kind of internal investigation of Altman, right?
The board
his business.
The board is planning on looking at Sam Altman. Investigating some of the behavior that led to his ouster, which is still rather cloudy. There are questions about whether it had to do with AI safety, whether it had to do with some of his other business interests. He is involved in a number of other companies, some of which could potentially have AI elements as well. And so it's not clear exactly how that investigation will be conducted, as far as I understand. Am I correct on that,
Rachel? Yeah, come on in on that, because he's going to still do his side things, right? Or is he?
Yeah, I mean, I have not asked him directly about that, but okay. One would assume that those things are going to continue, at least for now. But I did actually. I asked Sam. I got to speak to him and Mira Murati, his CTO, yesterday. I asked them about the investigation. I think Sam said that I should ask the board. So then I spoke to Larry Summers after that, and I said, Larry, Sam said to ask you, what about the investigation? I mean, Larry basically said, yes, we're going to do this investigation, which is what they're supposed to be doing. But he also politely and very rightly pointed out, give me a minute. I mean, he basically said, look, we've been here for 30 minutes, this new board. So it's going to take a little time, but it sounds like an investigation will be conducted, and they'll try to figure out basically what happened here, which is what a lot of people want to know too.
Yeah. And Rachel, what are the prospects for some significant changes to the for-profit startup within a nonprofit entity, and this board composition? Is there a chance that changes significantly going forward?
Ooh, that's a good question. I think we're still trying to figure that one out. I mean, it was not even that long ago. I mean, okay, it was 2019. Maybe it doesn't feel that long ago. But in 2019, the company, which was founded in 2015, said, actually, we were a nonprofit, as people knew at the time, but now we're going to be what's called a capped profit company. And really, if you haven't seen it before, you should go onto their blog on their website and look at this blog post from 2019, because there's an org chart and you look at it and you're just like, what does this even mean? It's very complicated. So I'm sure there was a reason for setting it up that way. It remains to be seen if they're going to try to simplify it. There could be, perhaps the incoming board members will have something to say about that. We'll see.
So the other name that you mentioned there was Mira Murati, who's the back to being chief technology officer, which is interesting because it was Sam was in and then out, and then she was in and then maybe out and then was back to CTO. So what's her role going to be like? Well, what has it been previously, and what do we expect from her going forward?
That is a great question. So she is and was Chief Technology Officer, and I feel like I've talked to people about this quite a bit recently because I've been seeing her a lot recently. Over the past number of months, the company has been increasingly positioning her as a public face of the company, as a leader of the company. She's appeared alongside Sam Altman, literally alongside him, at events, either in public, like in front of audiences, or like a press scrum at OpenAI's Developer Day. It was her and Sam side by side with a bunch of reporters. So it's clear that she is a leader and a pretty public leader at the company, and she will remain as such. It sounds like they work pretty collaboratively as a team there, and she is part of the very top group of those people.
What are the potential or go ahead, Karen.
No, well, just there's one thing in this story that Altman says he has no equity in OpenAI. Is that really true?
That is what he has said publicly.
Huh. Isn't that a little odd?
Yeah.
It's a little odd. Oh, wait, there's something odd to this story? Shocking.
No, look, where we began this year was like generative AI force. We've all seen this play out over the course of the year. So it was so satisfying just to know that just like any workplace, there's drama and it bursts forth, right in time for us to like mess with our holidays and everything else.
Has anybody asked?
Also just prove that it is actually a perfect bookend for the year.
What does ChatGPT say about all of this?
Yeah. I asked ChatGPT in the middle of all this, actually. I was like, I don't know what else to do anymore. Can ChatGPT just sort this out for us? An issue with ChatGPT, though, depending on how you're using it, is its training data, stops at a certain point. So
yeah,
it didn't say get
more
rid of
drama, not a training set that's currently been loaded.
I was like, is Sam Altman still in charge of OpenAI? And it was like, well, as of the end of my training day, and I was like, I don't care.
Yes.
That's
but I do think that it's like it's perfect, right? Like the year started with everybody obsessed with ChatGPT, whether or not it was loved or hated for various reasons. We're ending the year now with it is ChatGPT's birthday today.
Happy birthday.
And we have all this drama that just is behind us.
Get your sleep, kiddo, because you're going to need it next year. I can just feel it. Rachel Metz, AI reporter at Bloomberg News. Joshua Brustein, Bloomberg Businessweek technology editor, and the editor of Bloomberg Businessweek, Joel Weber. Both of those guys in studio. All right, check it out. It's in the new issue. This is Bloomberg.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just under 18 minutes left in the trading session, getting ready to 30 days have September, April, June, and November. Getting ready to wrap up November. I always have to check them. I was like, wait, is this one of those 31? No. It's kind of a meh day when it comes to the equity trade, but what a month it's been. Same thing for the bond market. It's just unbelievable. And it's that time of the year when we are wrapping up not just presents, but the year that was, and just really thinking largely about what lies ahead in the new year.
It's such a big thing, especially with what's going to happen ahead of that December 13th Fed decision, what it means
Does it
potentially.
really matter? Does it
Does
really?
We'll get those quarterly projections and dot plots that we know will get changed again in March.
The scatter platter. All right. Our next guest has the top 10 items on his mind as we drive to the close on this Thursday. Back with us in our Bloomberg Interactive Broker Studio, real treat, John Augustine, CIO of Huntington Private Bank, a wealth manager, subsidiary of the publicly held bank Huntington Bank Shares. How are you, sir?
Great.
Good.
Wonderful. Ready for the holidays.
I know, right?
As you all were talking
Wrap
about.
it up, right? I'm just curious, before we get into kind of your thoughts on the market, you are a subsidiary of Huntington Bank Shares. I'm just curious about the conversations you guys are just talking about. They obviously, in the banking environment, have a good clue of consumers and lending and so on and so forth. You are obviously closely tied to what investors are on their mind. How would you sum up the environment right now?
The environment's still constructive. Now, the consumer has split. There's a credit consumer who's under stress, higher interest rates, but the job market's still good. There's a cash customer that's still plentiful on cash. So what we've noticed since the summer, the consumer attitudes have shifted, which even played through to consumer confidence this week. If you remember, last month got revised down. This month was higher than expected. So there's been a shift High-end, low-end consumers.
The consumers who have cash, is that the higher
end?
Higher end.
Cash customers are still there.
And they're important to the, I mean, we talk about consumers generally about important to the economy. Are they more important to the economy in your view in terms of what you see they are doing?
They have been second half of this year.
Yeah.
The question for next year now is, will rates come down middle of the year as the weather warms up, whatever you want to call it, to help bring the credit customer back?
All right.
I'm looking at the KBW Bank Index. If you look for monthly, it's up 15%, but obviously we're on the back of, when you think back to the spring and March with those issues with regional banks, what are you hearing about the banking environment right now? So
the banking environment, we would say, is trading on the yield curve righting itself next year. Risk of recession coming down, which we've seen in consensus. Then in the third quarter, the yield curve is supposed to right itself, go back to being positive. And that's what the markets are thinking about. That's our view of what the markets are thinking about.
Would you be buying banks here?
Yeah, baby steps.
Yeah, big guys, little guys.
Yeah, we're
mid,
primarily
what?
big. We're primarily large cap shop.
Yeah.
Huntington, but that's one of three groups we would be buying. Financials, banks specifically.
What else, when we talk about these 10 items on your mind, what else is on your mind?
Well, what else is on our mind is, do we get to exhale next year? Because we've been holding our breath.
Can we just run out of this year?
You know, we were wrong at our shop. We thought the Fed would be off the table in June. That's not happened.
Right. But everybody's been, you know.
We were right on the economy. We were wrong on the Fed. So we were able to guide portfolios pretty well. But next year, do we get to exhale? Will we not wait for the jobs report every Friday, not wait for the Fed meeting every 6 weeks or so? Will we be able to exhale? We think what's going on now, and you all have been talking about it in November, is Americans are exhaling because they're investing some cash, both stocks and bonds. And that's what's going on in November.
You're seeing that directly, and it's continuing.
We've been talking about it with our portfolio managers for the last 60 days. Almost.
So is it no longer about moving into cash-like or cash investments?
Moving out of.
It is moving out.
What about money market funds?
Yeah.
Same equivalent. I mean, it's a 5% world there. That's new. It was 0 a couple years ago. But now I think people are realizing, you know, the Bloomberg Barclays Ag is up 4.5% month of November. And stocks are up, obviously, large caps.
Right.
I think people are starting to realize that. Starting to think about all the media talk, all of our talk about lower Fed funds rate next year and moving out of cash, doing it slowly, both sides, stocks and bonds.
You don't think, though, the Fed gets to 2%? You
think we don't think their inflation call
target
gets to 2%.
3%. And you
stays in 3%.
And you think the Fed's going to be okay with it? They're not going to be like, we want to get it down?
Yeah, they're going to be okay with it. We think what they're going to be watching more next year is the unemployment rate. They'll shift focus.
How significant do you think that gets hurt?
It's going to go above 4.
Not terrible.
And as you talked about, Jess, it's really that SEP, because they really blinked in September. They went from an expectation of an unemployment rate of 4.5 to 4.1. Now what are they going to do in December? That'll be of interest to us. That statement of economic projections, you're right, is going to be a big deal out of that Fed meeting now that it's expected they stay on hold.
Right. So what are you advising clients to buy and sell?
Both ways. You buy something. Now, think about the bond market, though. We're in the camp 4 to 4.5, 10-year next year. So we're a little bit above consensus. Consensus thinks it starts with a 3. We say 4. So at the low end of the range, buy stocks. High end of the range, buy bonds. You can buy either way. Right now, we're kind of in the middle. 10 years kind of in the middle.
So you go back to kind of a balanced portfolio.
Balanced portfolio.
What do you do with some of the high growth areas, the Magnificent Seven, that have often, outperformed again, even though people are saying enough?
Even today, we're seeing some rotation. We're seeing a broadening out. We've been seeing it through the month. There were 2 new sectors that came into play positively in November, financials and REITs, both up double digits in November. So that joined the 3 sectors that the Magnificent Seven are in. We would suggest, and in our 10 things, maybe the other 493 get a shot next year.
So it'll flip. So maybe those gains annually next year still higher, just not as strong because you don't have that more heavily weighted stocks that are pushing things higher.
Yeah, and the expectation that the profits recession in the S&P 500 is over. and profits move up broadly, not just those big growth stocks. That's probably what helps them the most. The other 493, if anything.
So it's not a case of that the 7 stop
Growing.
gaining. The other ones just
The other
join
ones
the
catch
party.
up.
Yeah.
Because it's interesting, because I feel like when everybody's...
Because that's where earnings growth is.
Exactly. Do you have a number, favorite investment as we head into the new year, or favorite investment idea? Just got about 20 seconds.
Stay in the U.S. first half of the year.
Okay.
The summer is going to be most interesting next year. Will we go small caps? Will we go overseas? That's what's going to be interesting next summer.
And I've heard both
Yep.
people
No,
kind of strategizing
we're
around
totally
it.
with you.
Be well. Happy holidays.
You too. Great to see you.
Great to see you, as
In
always.
studio.
John Augustine, CIO of Huntington Private Bank, joining us here in our Bloomberg Interactive Broker studio.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.